Hi, everyone. 2 points, I think, before I start. One, I don't think I was quite going to become a professional footballer, but I live with that story. And two, I must say that I've very recently joined Barclays. So these are my views, having worked in the UK banking industry for some years and worked at 6 or 7 of the banks and financial institutions, as well as some consultancies around the place. So Barclays just said I had to say that. Also, I just touching on the speech earlier in terms of worrying that the mobile data producers are maybe not as far forward as I thought. I'm not sure if I should be worried or encouraged by that, because I was fairly convinced we were a long way off. Okay. In case anyone gets worried as well, I haven't seen a bank that can do everything I'm about to speak of. I'm very much in future tense and where I think we can get to, having seen what I've seen. For those who don't work in banks, I'm pretty sure that's everyone. We're all facing a lot of pressures. I don't know quite how they are in the Middle East, certainly in Western Europe and the UK and the US. Everyone I previously worked with and now I work for Barclays are all under these incredible pressures. And it is creating a lot of constraint within the banking industry and is squeezing things, and some things that maybe shouldn't have been done but we were getting away with, some things that hadn't previously been done but we were really driving towards. And it's interesting to hear if only there was investment to become better. I think that those questions and those answers more so are being faced on now in these times of incredible pressure. So more just a context on right now, what are we seeing and why is that driving change, and why are we not happy to do the things that we were doing, certainly in the early 2000s and the late 90s. I'm touching on big data here. A lot of people talk about it. I do a few of these events, and people do talk about big data. A lot of people are worried about it. Some people are excited by it. Very few people seem to know what it is. So when I use it going forward, I'm really talking about 3 V's, and they are volume of data, the sheer amount of data that we can get nowadays, and I'll touch on a quote from Schmidt shortly on that. The velocity of data, the speed in which we can get data, or should I say that we can get data? Should I say that the data is available? Because I'm not sure I've ever worked at a bank that could actually get hold of data that fast, but that it is out there and available, as well as the variety of data that we've got. And we've touched on some of the social stuff around Twitter and Facebook and how hard that can be to get into, but as well as our more traditional lines around channels. And we talked about branches and what they'll be in the future. And we had some speeches yesterday about, will we have branches, or is the branch going to be in our pocket in our mobile phone, and where that can be. And is that data from us? Is it tied into other people's data? I thought it was an interesting point from the guy at ENB at the back about, can we leverage the kind of telecoms, and how can we, or do we allow ourselves to leverage that up in terms of how rich the data could be. All I would say on this, there's a lot of data out there. Okay, there's some very structured data we know about. When are people saving money? When do they take a mortgage? When do they walk into our branch and do whatever they need to do? We as banks are traditionally very good at recording that on the assumption the customer says yes. I'd encourage you, if you're recording any of this data, to always record when someone says no as well. When you've offered them a mortgage or a loan or whatever it may be and they say no, I think it's incredibly important, if not richer than those who say yes. But then we go all the way to the stuff that people get very excited by and are very much buzzwords of now, the unstructured data. And we've heard about some of the problems earlier around Twitter, Facebook, whatever they may be. Often far less quantitative, far more qualitative. People feeling good, people feeling unhappy, angry, trolling. How do we deal with those, as opposed to quantitative data where they took a loan out at 10,000, at 6% for 3 years. These are things very easy for us as people who like data and analytics to use. Really, these are posing a lot more questions around what we do. My conversations to you, as it was when I've been at various banks consulting before, and indeed at Barclays where I am now, is about manageability. Don't chase something because it sounds good, because there's a great dream and that in 2020 everyone on this stage says that we can get there. I agree, certainly in the most, but actually it's about manageability for you today. For those people in the room today who, let's presume, don't own their banks, it's about how do you prove what you've done has value, how do you move forward with that, and how do you get your seniors to get buy-in, because without that, really, you won't have the capacity, we won't have the spend that we talked about in terms of building platforms in order to really leverage this by 2020, because people will have lost faith by 2014. So it's about manageability, it's about what you think you have the capability to use. Interesting quote from Eric Schmidt, CEO of Google, who's come into some not so positive press recently in the UK. There are 5 exabytes of information produced by the entire world up until 2003. That same amount of data is now created in less than 2 days. They don't think it will be long before it's 1 day. There is an enormous amount of data out there, folks. But just lots of data, he says, as a data analyst. Just data is no good to any of us. Data is only good because it can inform, because it can create information, because it can drive change, because it can create actionable intelligence. Without that, folks, data is just letters and numbers in a box. And while we're always hungry for it as analysts, and I'm sure we'll talk all day about how we want more data, and people are presumably listening to this about how they can get more data and what data should they get, I would say be careful of overload. It is very possible in today's age. It's almost difficult not to end up with too much data. And the real problem with data is it will be able to answer any question you want. A quick one on the customer and how that sees the data. And certainly, I talk here of my experience more of Western Europe and the UK, but I'm sure most of these are true regardless and across the world. It doesn't really matter on the interaction point. By the way, I'm not suggesting that you have a bank with just one customer. That better be a very big customer if that's your plan. But merely that the customers themselves don't perceive that they are one of thousands going to just one of a number of banks. They have a relationship with you, the bank, and you, the bank, have a relationship with that customer. And whether they use an ATM or the branch or tweet or go online, they don't know how our internal structures are. They don't realize, oh, well, that went through to the head of online channel distribution, and the online channel distribution doesn't really know ATM distribution point, because ATM distribution point is managed by current accounts, but the online is managed by the payments team. However your bank is set up, the customers don't realize that. They don't understand how many people work for banks and how siloed we often are. And we must have ways, and we must use technology to be able to use kind of across the entire back office. It's no good anymore just to be siloed and just to say, well, actually, that's a kind of credit card problem. So if they annoy the customer, or they lose the customer, well, you know, we're annoyed. They shouldn't have done that. They should have done something else. We are one bank to that customer. It is one brand, talking about the power of brands before. They're not multiple brands. Well, I suppose you could conceivably have multiple brands. But that customer comes to you because of that brand, not because of the building or the piece of plastic. Okay? How can we use all this data? Well, we can use this data in the way we've always used data. There's nothing particularly exciting on here. You know, we can have some known metrics, and we can have some new known metrics. Yeah? We can have, I don't know, zing factor on Twitter, or likes on Facebook, or like rates on Facebook versus dislikes. But they're just new metrics. And of course, we can update them potentially more frequently. We can potentially be live feeds. I've never seen a banking platform that could do with this, but they could be. They could be possible. But really, all they're going to do is deliver outputs that may be better and a little bit zingier and a little bit smart and a little bit crisper and more visual, right? And I'm just looking down the sponsors here. I don't want to annoy anyone. No, there's no one here from data visualization. So, you know, be that the Tableaus or the ClickViews or whomever that is. And we can use those, and they can be better than the reports we have today. Like, I'm not denying that, but really no step change. So we can use this data to enrich and have better reports like the ones we have now, but with more stuff in it, potentially live and potentially interactive. Where I think it's really interesting is, how do you start to use this data to discover things? To find out that, did you know that all of our customers that actually take the red metro line rather than the green metro line make us a lot more money? Sorry, I don't know the names of the Dubai lines if they have them. How do we find that out? How do we know that our customers who live at odd numbers of houses rather than even numbers make us more money? The answer is, you have to just be able to discover. You have to create tools and situations, and indeed teams if you don't have them, to just have the capability and the desire to go out and chase discovery within data. You know, and I'm talking about, you need customer data there to find out how that's going to drive. You need operational data to know, how does that mean to the bank? Can we do that if we wanted to segment that in that way? As well as obviously the financial data, because people want to see returns on investment. How do we do that? We do that through visualization. There's now too much data to see tables. Right? We have to look for peaks and troughs, outliers. We have to know what that means. You've got to get lots of data from multiple sources. To the point earlier, you've got to be able to link those up. If you can't link those up, there's no point in doing that. You're just creating a story that can't necessarily be followed through empirically. Find trends, find outliers, create tests to validate those, and then they can either feed back to the slide we had before, so we can end up with a better report with some new known metric that we've found out and we've discovered there may be power in, and follow that until the value runs out. Or we can actually drive a management action. We're actually going to go after now odd-numbered people who live at odd-numbered houses or whatever it is. I'm deliberately flippant here. This is very anodyne, folks, merely because if I put a suggestion up here, that it become very emotive. So I'll talk us through one. What type of management action might we be talking about? Well, we have a relationship with the bank. The bank has a relationship with the customer. And we're going to try and change that through some kind of management action to change our relationship to the future. So we, as the bank, in some way with the customer, are going to change the way in which we interact. That we now are potentially going to offer higher or lower rates, or increased limits, or offers that didn't happen before, because we've found something through discovery. And what could that be? I was thinking about an example. I was reading a paper on the way over, and it suggested that Dubai's take-up in contactless payments was, in the growth rate, I think it was, so it was highly driven by context. The growth rate in contactless payments was faster, I think, than anywhere else. And that intrigued me in terms of, in the UK, people know about contactless. We've had it for a long time. I can speak now as Barclays, our customer. We introduced it. But how do we use that? Somewhat, if we know, because we've got an app maybe on the mobile phone for our mobile banking, and that's live, and we know that they pay with their card using the chip and pin to buy a sandwich or a meal every lunchtime, and they go to shop A or shop B. They kind of flip between the two for lunch. And they generally lunch at about 1 o'clock in the afternoon. Could we as the bank interact with that and say, did you know that shop B offers contactless payments, queues can be heavy at lunchtime, and for the next week they're offering a 10% discount, whatever that may be, which of course could link back to our other customer or client being the shop that uses the contactless payment technology. And we could try and interact with a customer. Do I think we're ready for that? No, I don't, by the way. True of almost everything I'm going to talk of here. Do I think we could get there? Do I think some customers would see that as a benefit? Absolutely. Am I scared slightly that many customers wouldn't see it as a benefit and would be a bit scared that the all-seeing eye of the bank is chasing them down? I think possibly. But I do see it as somewhere we can go. I think my point here is find something in the data, discover something that's new, using the richer data that we have, and drive some kind of change. Because without change, we're just creating presentation packs for people like me to stand up or talk within a bank, but actually nothing changes. Okay? It's our interaction with people outside of this room and forum here that's going to change the way that we bank, that's going to change our metrics and financials. How else could we use it? I've seen this on a very limited basis in one bank in the UK, and that was looking at propensity models as people came in through different channels. So there was one of these for online as well. But it said basically, this person has come in and requested a product. They have X and Y products with us. They've come into the branch today. The example I saw as well said whether it was afternoon or morning that the person came in, because they found that a big driver. And they said they have great propensity to take up these two bottom products. There is some propensity to take up the middle products, but there's very little propensity in the top products. And what this doesn't say is the profitability. We may find that one of the top products is highly profitable, and that actually we have our salespeople getting very encouraged and very enthused about trying to sell a product that actually they've got very little chance of delivering. And that actually, wouldn't it be a better customer experience? Wouldn't it be better for the customer to know that lots of other people like you have the following products? And that actually, with lighter sales, without the pressure potentially, that we can deliver greater results. But without this, our front office, our sales, our branches, our online marketing, they need to know this. This is the power that we as the data people at the very back of the shop need to give the people at the very front of the shop in order to do their job better and to improve our interaction with the customer and hopefully enrich our brand, as we heard talk about before. The art of the question. My real fear, and this is my real fear, it is one great takeaway today from massive data, big data. Massive data, we have a phrase, it's big data. Would be that if you have an almost infinite amount of data, you can get an answer to any question. There is no question that cannot be answered. Is it important? Is it relevant? Should it drive anything? Should you listen to the answer? Almost certainly not. And that means that our technique back in the 90s of, wouldn't it be great if we could find the answer to which customers make us the most money? Or which customers have the greatest footfall in our branches? We have to be very careful and very specific about how we ask those questions. Because we only have to slip in the question asking to the data person to crunch the answer, and they will give us an answer. 72, 41, 89. What does that mean? Well, we have to be very careful before we get carried away and someone says, oh, why did this happen? Oh, well, we asked this question and this was a driver of that, so we found out how many of those and we've come to here. Oh, well, you understand that no one under the age of 7 actually can have a bank. Oh, I see, yeah, it's a strange answer. And that can happen very easily, folks, because we can all get excited by the speed in which we can manipulate data and the amount of data that we can manipulate now. So be very clear. What is the type of answer I want from this question? How do I do that? Then by all means, use and leverage all of the techniques that we have available to us, and I'm sure our sponsors can help us discover about trying to get towards those customer needs. And that often, unfortunately, he says, possibly fortunately for me, is about hiring someone who understands data, who is able to manipulate and see around data and see the bigger picture, but actually is about, hang on, there's a customer, there's a bank, and it's got to be something to do with that relationship that we're focusing on here, rather than just a number we're messing about internally, and where are we driving towards? And often those people who are able to deal with those strategic questions, let's say, are not necessarily the people. You don't want to give that job to someone who's very good at typing letters into a computer so that an answer comes out of a computer. Sorry, that wasn't a job pitch. I am currently employed. But you know, think about that, because they are not the same skills. Don't take the best farmer and put him in charge of selling farm products, okay? Or creating where one might farm, okay? Lots of test and learn. Data visualization, I think, is great. That's the ability to see data in a very visual format rather than just tables. We have too much data now for tables, folks. This is my soft stuff, right? So I'm putting my soft hat on now. How should this help us change our relationship with banks, as banks with customers? What does that mean to us? Well, obviously, we're all happy that it means price and volume and cost and risk and all of those things. And those who work in those areas are probably thinking all the way along here, oh, price optimization, I'll create a curve and we'll make more money. And that's all good. I'm not against that, and I've worked in that area as well. But it also means, from a customer service point of view, how do we know what's going to be possibly problematic to these customers when they ring up? How do we know the types of things they're going to say to us and have an answer ready, rather than having to move them around lots of times? How do we continually improve and keep things going and all of that good stuff? As well as, you know, how are we dealing with these customers? I come back to my point before. Interaction points are very interesting, and we tend to, from data, kind of bifurcate that these people are online, and these people use mobile, and these people go in branches, and these people use ATMs. But the reality is that person just uses our brand. And how can we pull that together, and are we able to, question mark, are we able to link those together? Because if we're not, then that's really dangerous. My final slide. Without data, in the blind area, and apologies for the analogy here, but just in terms of mixed nuts, if you just grab in and you get some good stuff and you get some bad stuff, but overall that's kind of okay and you're happy, don't assume that that will now continue going forward. Because not everyone is blind now. Some people have torches. Some people are able to see into that room, and they are able to start seeing which areas of the population they want to take. They're starting to segment people. And then clearly not at the top, but if they got there, folks, you're only going to be left with what they don't want, yeah? So just saying, well, we didn't have that, but we're kind of okay with our returns now. We're kind of okay with the way the customers, you know, our metrics are kind of okay. They will slowly get worse as people take more and more of what they want, unless you're backing the fact that they don't know what they're doing and they're going to take the wrong people. It's possible, folks, okay? I'm just saying that just saying we're all right with what we've got really isn't really isn't a long-term play. It may be all right for a few years. I've never seen any bank fully get their heads around this, but I have seen questions and have just been recently hired into a bank that is starting to ask those questions. Can we answer them? No. Is the technology there? No. I think we're all pretty open with that. But the mere fact that people are asking the questions, I think is important. I think people will get to grips with this. I think there are people who leave this room and will think about how they solve these problems. So just being happy with what you've got historically, I don't think is good enough going forward, because people will start to take, in this analogy, the cashew nuts or whatever people's favorite nut is, and just leave you with the peanuts. Okay? And that's it, folks.